Schwab Asset Management is proud to support the Inside ETFs podcast. As one of the nation's largest ETF providers, Schwab Asset Management offers insights and perspectives that can help advisors build on their ETF expertise. Did you know that more millennials are choosing ETFs as their investment vehicle of choice? Or that many investors plan to increase their allocation to fixed income, smart beta, and actively managed ETFs? Find out how ETFs can support your clients' goals with Schwab Asset Management's educational resources. Learn more at schwabassetmanagement.com/ETF know-how. Hello and welcome to Inside ETFs, the podcast where we bring the latest and greatest ETF industry perspectives directly to you through in-depth conversations with key thought leaders from across the ETF ecosystem. I'm your host, Douglas Yones, the head of exchange-traded products at the New York Stock Exchange, the home of ETFs. Now, today I'm joined by Sylvia Jablonski. She is the CEO and CIO of Defiance ETFs. Founded in 2018, Defiance is an ETF firm entirely focused on thematic investing. And these themes, they cut across traditional sectors. They include technologies or practices that are set to transform existing paradigms of how we live, how we work, receive healthcare, and pursue leisure. Sylvia, thank you so much for being here today.
Hi, Doug. Thanks so much for having me. Excited to be here.
So we've known each other for many years, but I thought it'd be worth kind of starting at the beginning. Could you share a bit about how you personally got into the ETF business?
Yeah, sure. And it has been quite a while. I forget that we're no longer 21. Yeah, so I started my career working in kind of the investment banking side. And, I did one of those rotations where you work in different groups and things like that. And I ended up working at Deutsche Bank in a swaps group, basically flow trading, where, you essentially trade, settle, sell, total return swaps, synthetic futures, Delta One types of products to different clients. And, so I sort of learned about equity derivatives and swaps and got a good understanding of those businesses while there. And then I ended up starting to work with different ETF providers when they started using swaps. And, my career kind of like hopped to SocGen next, where my major role was working with and covering ETF issuers like ProShares on their daily swap rebalance and whatnot. I kind of did that for a couple of years and became an expert on like the equity finance side of things, equity derivatives trading side of things. And, there's a period of time where Direction ETFs, the levered inverse firm, was starting to come out with 3x levered funds. And I had a friend over there who I got talking to, and they were sort of looking to grow and start, and conversation with him led to meeting with Dan O'Neill, the kind of founder and president of that firm. And I ended up taking my expertise and joining Direction. So I spent 13 years or so working there, and that was my first foray into ETFs. And while at Direction, I worked with Matt Belsky, who is the original founder of Defiance ETFs. And we worked together for 5 years, and we sort of hustled together, and we're out there, educating clients on ETFs, doing the capital market stuff, trying to really spread the word about ETF education and availability and kind of these up and coming, cool thematic types of ETF products. So we worked together there. And when he went to start Defiance, it was really a no-brainer to join and partner up with him again and really try to build this business together and bring something really cool and unique to the market.
One of the things I love so much about this podcast and hearing different ways in which people kind of work through their careers, a lot of people don't realize to become a CEO, to become a CIO, which is most of the people guests on this podcast, there's a lot of meandering that goes on, and there's a lot of following your interests and following what you love to do and learning new things. And I love that about our guests. I love that about your story. Was there a point in time, Sylvia, where you just sort of, because you were doing a lot of different things all around finance, where you said to yourself, boy, I just really love ETFs?
Yeah, I think and you make a really great point, and I think it's something, that's super important for, young people starting their careers out to think about. When you sort of graduate college, you think about like you have this idea in your mind of the job you're going to have. So for me, it was just, I went to Boston College, and so everybody who graduates with an econ degree or finance degree just wants to get on one of those, iBanking rotations, and then kind of just figure out where you're going to end up in the bank. But it like definitely banking, right? You have to work for one of the big banks. And so I did that and I had that experience. But I just think that like the more you sort of like talk to people and work in your actual job is the more you start thinking about the career that you want, and noticing, the different types of jobs that people do and the different places that people work. And they're not necessarily only big banks. So I definitely paid my dues, as they say. I mean, the upside of that, to your point about CEOs and CIOs, is you really have to have a lot of experience and understand all of the moving parts that go into a business. And, I definitely feel sort of confident in that knowledge, and it definitely takes time to sort of get it. And I think it helps so much. Like there are things that I think about in this role that, I didn't experience in my last role that, I'm kind of going back to 2008 to think about, and kind of like remember how they worked and whatnot. So I'm really grateful for all the experiences I've had along the way and all of the amazing leaders I've worked for along the way. I got really lucky in that regard. But yeah, I started, when I was at SocGen and we were covering all the different ETF companies, I thought to myself, this is going to be the next thing, and this is in no way a knock on mutual funds, but at that time, mutual funds were like, 2% fees for S&P 500 exposure. Active management was like some minor thing that allowed you to charge a really high fee. And I thought to myself, this is where the world's going to go. State Street and BlackRock iShares and Vanguard and whatnot. They were coming out with these wrappers that were just super cheap and cost efficient. You could trade them throughout the day. And being, someone who was thinking about the daily rebalancing, the trading of these products, I thought to myself, like, oh my gosh, this is just so much easier, cleaner, and more efficient. Everyone in the world is going to, jump on these things. And obviously they were around far longer than I was, but when they entered kind of my atmosphere, that was oh yeah, I'm kind of like a little too late, but early, but still early enough. I'm going to give this a shot. And, moving to an ETF provider was definitely the best decision I ever made. And I think it just changed the course of my entire career.
And now here we are, as you said, everyone in the world is jumping on this because investors all around the world are buying, investing, trading US listed ETFs. For an advisor out there that might only really be familiar with a few of Defiance's ETFs, could you share a little bit more about Defiance and your ETF lineup?
Yeah, sure. So, going back to some of my past experiences, one thing that, Matt and I and Paul and Jacob and some of our partners at Defiance often talked about was that, ETFs have been, thus far kind of geared towards the top RIAs, right? Everybody wants to launch the product that, sort of like the CLS guys or the Stadium guys, or who, sort of pick like your big top advisors out there are going to put in a model and really want to invest in, and, it'll really support their business. And that's amazing. But so many of those products already exist. And we got to thinking, it was sort of like 2020, you had this like meme stock craze. You had sort of a market that was recovering, and you had young people who had been sitting home during COVID and becoming really interested in markets. And we really got to thinking there aren't thematic ETFs. Thematic ETFs obviously existed, and give lots of credit to, Kathy Wood for sort of, shining a spotlight on them. I think she opened up doors for companies like ours too. We got to thinking like, what does a young investor want exposure to? He doesn't want to go to an advisor who's going to put him in, SPY and Qs and whatever. That's sort of, those are amazing products, but there's a portion of that young person's portfolio that, he or she wants to allocate towards the future, right? What is the future of Qs? Could it be something like quantum computing? Could it be something like big data? Could it be something like artificial intelligence, electric vehicles, 5G in terms of energy? What will energy look like? Is it going to be oil and gas companies, energy companies, or could it be things like solar, wind, hydrogen? So we kind of went through like sector by sector, thinking about what do we really care about? What do people sort of younger than us care about? And because we care and they care, I think, it becomes something where the high net worth private clients that are like managing family money, they start to care, right? And so our first go of it was 5G. So we came up with what we thought would be sort of the future of communications, this idea that, you essentially need 5G, the speed, the bandwidth to power everything from electric vehicles, artificial intelligence, robotics, smart cities, connecting rural and urban America. And, it was something that really resonated with the retail trader. And then, you have a lot of experience in this over time. It's sort of like volume begets volume. And at first it was sort of the retail trader, the young person who's just like, this 5G transformation is going to be one of the biggest things that we ever sort of lived through from a technology and communications perspective. And, it picked up and it kind of got to the point where it was $1 billion ETF. And then all of a sudden you have those, sort of big RIAs, those, super smart think tanks and strategic allocators that started picking up on it as well and putting it in their portfolio. So we really like to think about thematic ETFs in a way that is, it's thematic because it's being classified as thematic, but we try to also keep a purity to it. So we'd like to think about what will a pure technology play look like in the future. And we think that quantum computing is very relevant in that space and would be a great complement to, whatever your kind of classic core Qs or State Street ETF or iShares ETF, whichever one you sort of use, it would be a great complement to that. And then we thought about energy and we came up with the hydrogen ETF. And then we thought about the future of kind of like travel and the exposure of getting that reopened trade in one wrapper. And that's how cruise came about. So, that's how we think about things, really. We try to create these industry defined sectors for the future, but we try to make them pure. We try to make them investable. One thing I will say is that we're not trying to be cute, right? We're not trying to like tell you what we think the next theme is. We're trying to tell you what we think the next group of companies to invest in for the future will be to do what already exists, if that sort of makes any sense.
Yeah, absolutely. And for those that might recognize the word Defiance and some of the founders of the firm, I want to kind of talk a little bit about the evolution of your business. It almost starts with a history lesson. There's a great movie called Defiance about some of the history of the founders and what their family members did to save many, many lives. I won't spoil it, but I do recommend everybody watch that movie. I think it's on Netflix. I know I saw it on Netflix. But could you take us to the ETF business, right? The founders, you coming together. There's been a bit of evolution. I mean, you talked us through a product lineup, but certainly how you think about yourselves and your alignment to advisors.
Yeah. So the firm and all of us at the firm. So it's myself, Matt Belsky, Paul Aton, and this is on the ETF side, David Honono. We have a whole other marketing group behind us too, led by Jacob and his team. But we have all spent a lot of time working with RIAs. So Matt and I have spent, and Paul have spent the better part of the last decade talking to, every RIA that was willing to talk to us, basically. And Paul came from BlackRock, so he, sort of definitely had that institutionalized exposure to RIAs. Matt spent some time at BlackRock, but we also spent time at Direction, where we had these levered inverse products. So we talked to RIAs that were sort of more tactical, more interested in, sort of high risk, high reward potential, or at least had risk appetite and were comfortable with volatility and whatnot. So amongst the three of us, we sort of really learned about what RIAs actually want, what they care about, and what is useful to them. So being in a position where, we're running our own firm, we can kind of do that in a very clean sort of way, right? So we for example are not trying to bring a menu, to an advisor and saying, here's the main course, here are the appetizers, here's the dessert, you should pick one of each, and all of these will be great. What we try to do is think about, the advisor, what he or she does, what their belief system is, and present the ETF that, actually makes sense to them. And, 5G and quantum and hydro and cruise came out, and they're definitely on the lower end of expense fees too. So we try to create these products that are fully transparent, that are fully, sort of like investable at a decent fee, and hope that we get some, sort of interest and take up as people start to invest in these growing themes and technologies. But for us, a lot of people sort of don't know about this, but we actually are two businesses. We have a business which is called Defiance Analytics, and that's our marketing engine. And I keep mentioning, Jacob, he's the CEO and founder of that business. During COVID, when Defiance was very much, startup mode, no huge roster of salespeople, stuck at home and trying to compete with, the Black Rocks and State Streets of the world. And, sort of how do you do that, right? You can't do it. You don't have 50 people who can pick up the phone and try to say, hey, we're here. Here are our products. Don't forget us. It's COVID, but there are these great opportunities. So we have this, robust digital marketing engine where we were able to essentially get as much visibility as some of the top players in the ETF industry through, sort of smart source algorithms, ad placements, digital marketing, social media, influencer work, videos, PR, press, ads, and we ended up forming almost a second business because a lot of people were kind of reaching out to us and saying, you guys are so small, like how on earth are you finding this big footprint in terms of just, kind of like media and marketing, and will you do it for us? So, we then ended up taking on a lot of clients. So we essentially have Defiance Analytics, the marketing company, and Defiance ETFs. So it's been, something that all of us work really hard at. And, myself and Paul are on the ETF side, Jacob is on the marketing side, Matt kind of sits on top and manages the whole business. And that's more or less our structure now.
So for those that are following, Sylvia is often on pretty much any finance news cast. You can find her everywhere, including CNBC quite often. Sylvia, that we have you live, right? So if you're looking at the markets right now and you're saying, hey, this has been a challenging 2022, are there ways that investors should be considering, managing their risk? Are there particular themes out there in the marketplace that you and your team look at and say, hey, given the markets that we're in today, these might be the economic themes that can be translated into this particular ETF?
Yeah, that's a great question. I think that the market is, it's an interesting market this year. I think that it kind of surprised perhaps a lot of people, or at least really put a lot of people to work in terms of how to manage their portfolios. So, I have a couple of views on this. I think in terms of, if I think about, specific to Defiance, right? When you see market pullbacks, when you see a NASDAQ pulling back, 30%, talking about June lows and S&P 20%, both of those in bear market territory, other indices in correction territory. And then you sort of see a recovery, but then the instability comes back and we still see these 2 to 3% pullback days and whatnot. Long story short, I'm a big believer in the school of Warren Buffett, right? Be greedy when others are fearful and fearful when others are greedy. So I do think that when you have these massive pullbacks and you're a long-term investor, I don't think that these things are going to play out this year. I'll make that very clear. But I do think that if you're invested in a theme like 5G and quantum computing and hydrogen, you just saw the anti-inflation bill at a DC and the amount of money that's going to focus on the climate. I don't think that's a reality today, but I absolutely think that the investment and the reality of that is going to exist in the next few years. These are times to just, be like a squirrel, gather your acorns, put them in your portfolio and get that exposure for the future. And that also just goes for, not even ETFs necessarily. You can do it through an ETF if you're not a stock picker, invest in NASDAQ, invest in S&P 500, find, the sort of product that you like best. I mean, there's so many of them out there and they're all incredibly well run and expensive. These are the times, especially for young people or people with investment horizons that span, 5, 10, even 20 years out. I mean, dollar cost averaging, this is the best opportunity. This is when you're kind of setting in your lows. I think that maybe the next year or two are going to be rough, but beyond that, these are great opportunities for investors to have cash on the sidelines to deploy. In terms of like hedging and protecting, I think that there are certain asset classes out there where people have just sort of like lost too much, lost too much, and they're extremely volatile and having a hard time. I think hedging exposure to some of the, crypto related themes or crypto technology related themes, for example, or high growth stocks. I think that, there are a lot of bear funds out there. There are a lot of different option strategies that investors could employ to kind of smooth out the ride or benefit from the downside in the short term, at least, right? Because I think that, if an investor doesn't need, or an RIA doesn't necessarily need to sort of withdraw cash to give to a client, or, withdraw cash to like pay your bills, which hopefully people don't invest that way and do have enough cushion on the side, then you want to ride this out, right? I mean, you don't want to recognize these types of losses. So you could, in the short term, benefit from inverse funds, or in the long term, just really look to gather assets.
Thank you for that. And I love the guidance, right, for young investors and all investors, right, to really recognize that short-term headlines can do damage to a portfolio versus sort of put it off to the side and focus on other things. If you look across the Defiance lineup, is there an ETF in there that you say to yourself, boy, everyone should know about this ETF? This ETF should have been doing better than it has, and it just hasn't gotten the attention it deserves.
Yeah, I think, it's sort of hard to pick between the two. Like, right now everything's getting crushed, but I just think that so cruise is the kind of the travel and reopen play, right? It's the hotel, airline, and cruise. And I think that sector is just absolutely hammered during COVID. And, you have this kind of unfriendly market right now, but so much of the spending that we're seeing, you even see it in the inflation report, right? Like the price of gas went down, and consumer spending kind of like shrunk a little bit on goods, but it really jumps in services, right? So I think that's kind of like a short term. In the next year or two, we're going to see that those companies kind of pick up and rebound. And just hydrogen, I think people kind of know it exists now because we've seen probably the most amount of interest in that ETF lately. But off of the bill, and like the idea that we have to find a way to get climate neutral, and whether or not you think we should be drilling more, like that, that could also be true, but we still need to move forward, right? So I think that like both types of both classic, let's call it, energy plays and alternative energy plays are going to be very interesting prospects for the next year or two. So I think, cruise and hydrogen, I think, are going to be catching a bid in the next year or two.
And kudos to the ever smart and brilliant marketing teams at Defiance. Hydrogen ETF, easy to remember, Hydro, HDRO, and Cruise, CRUZ, again, easy to remember. Well done on the ticker symbols. For investors, for advisors, right? You mentioned a few times you're small yet nimble. Are there ways that you say to them, hey, here's how we think you should best be engaging with the Defiance team?
Yeah, I think, the good thing about us is that we've made ourselves, sort of very human. So whether I'm the CEO of the firm, or the person who's like opening the mail at the firm, and this goes for every employee, everyone is available to talk to, sort of anyone, a retail client, an institutional client that has a question or is seeking education about our products. Like, there's no sort of someone will get back to you in a week type of thing. We take every phone call, we get back to everyone we can right away. That's something that, we always promised that we would do. We would never, no matter sort of like how big we get or successful we get, every single person who has an opinion or a question or whatever it is about our product, like, we want to hear from them. And that's, from Matt to myself to Paul to Jacob on the marketing side. I think what we try to do is, we, again, just, thinking about how we put such a high level of importance on technology and kind of like evolution and moving forward, and thinking about, what will be efficient in the future. Real credit to Jacob. A lot of what we do is online. It's on Twitter. It's on, LinkedIn. It's on Facebook. It's on Instagram. It's discussions with influencers who are, kind of out there and have big, kind of audiences, young and, young all the way through retirement alike. And we're really kind of talking to them through those channels. And I would like to say that it's something that we take pride in. It's one thing that I think, I'd like to believe we do a lot of things well, but this is one thing that I can say, looking back kind of like throughout my career and how different people, how different companies go about doing things. This is one thing that we do very, very differently. We are very, very efficient at communicating through larger platforms and, engaging with our clients in that way. So we're not just running, and there's sort of, again, nothing wrong with this, but we don't really run like a full page ad in Barron's and call it a day, right? We want to find who's engaging with our ETF and provide them material and content in the way that they like to receive it. And that could be through, a chat room, it could be through Twitter, it could be through Instagram. And we do that incredibly well.
Yeah, and again, I recommend and suggest those of you who don't know Sylvia, you can find her on all the social media channels. You'd of course follow her. And if you want to learn more about Defiance and their ETFs, you can go to defianceetfs.com. I'm looking at it now. There's a tab on insights. There's a tab on news. You can read a lot of different articles. There's even materials for both advisors and individuals. And of course, my film recommendation to watch Defiance. Great movie. Sylvia, I want to thank you so much for being here. That is a wrap on this edition of the Inside ETFs podcast. As a reminder, you can find this episode as well as many other episodes of our podcast series on the New York Stock Exchange's website, homeofetfs.com. Sylvia, thank you for sharing your insights and everything across the Defiance ETF ecosystem. Please stay tuned for upcoming episodes featuring thought leaders from across the ETF ecosystem. I'm Douglas Yones, head of exchange traded funds at the New York Stock Exchange, the home of ETFs. Schwab Asset Management is proud to support the Inside ETFs podcast. As one of the nation's largest ETF providers, Schwab Asset Management offers insights and perspectives that can help advisors build on their ETF expertise. Did you know that more millennials are choosing ETFs as their investment vehicle of choice? Or that many investors plan to increase their allocation to fixed income, smart beta, and actively managed ETFs? Find out how ETFs can support your clients' goals with Schwab Asset Management's educational resources. Learn more at schwabassetmanagement.com/ETF know-how.